Thank you for tuning in. Dividend Dashboard here, and the 7th month, July, comes to an end. In this video, we're covering a quick YouTube update and, as usual, the monthly portfolio update in full transparency, where we go over the stocks I bought, dividends received, portfolio value, performance, and much more. So if you want to follow a small investor and support his journey, all you need to do is subscribe and like this video. It will help my channel be shown to the correct audience and continue growing. Let's dive in. My YouTube channel is sitting at 1,513 subscribers. So far, the growth has been very slow and minimal, but as long as it's above 1K, then I'm good. However, the more people follow me, the better, because there will be more potential viewers watching my content. The top 5 places where people watch my content from: number 1, we got United States with 39%, number 2, India 10%, Canada 1.9%, United Kingdom 1.6%, and Australia 1.3%. It's kind of sad to not see the place where I'm from, which is Puerto Rico, to not be in the top 5. So hopefully that will change in the future. In terms of watch time received from my viewers, we have 83% not subscribed and 16% subscribed. So if you watch my videos on a consistent basis, I guess it's time to hit that subscribe button. Overall, the channel is not moving in the right direction. I would expect to have more traction due to the amount of work and effort I put on my videos, but we all know the algorithm doesn't work that way. So what's left is to continue posting content and growing the channel to see where all of this hard work will have some sort of reward at the end of the tunnel. Alright, moving to the stocks I bought in the month of July. Mid-July, I had to stop my portfolio contributions due to me quitting my 9-to-5 job without having another job aligned. So the contributions for the first 2 weeks of the month, plus some dividends, were used to purchase the following shares: Nike 2.02 shares, Google 0.14 shares, and MasterCard 0.20 shares. Nike had a huge dip due to bad earnings and losing market share to competition. It is a super small holding of mine and wanted to do some dollar cost average. Long term, I believe the company will be okay, but they need to step it up and regain the competitive advantage, which is leverage their brand and offer great products in all areas. For Google and MasterCard, I added small tranches that goes in line with my 2024 goals of high grading my portfolio. For the dividends received, from left to right, we got Nike $1.54, Coca-Cola $1.56, ADP $1.44, Kimberly-Clark $5, Realty Income $5.76, and JP Morgan Chase $6.84, for a total amount of $22.14. Now, July has always been one of my lowest paying months since the beginning, so the amount doesn't impress me. The companies that pay me this month are companies that I haven't bought for a long time, except for Realty Income, which I bought some tranches earlier this year. Looking at the numbers, starting in 2020, $2.19, 2021, $4.89, 2022, $8.13, 2023, $16.67, and 2024, $22.14. With the increase of high payers like Kimberly-Clark and JP Morgan, we can see the percentage increase from 2022 to 2023, and then it levels out to 22% from 2023 to 2024. Again, this is due to me not buying more of the companies that pay me this month. Every portfolio that holds individual holdings will have an underpaying month. So for me, this is completely normal, but with room for improvement as well. Moving on, we got a portfolio value of $22,442.77 with $37 in buying power. It has a weighted dividend yield of 2.80% with a projected annual dividend of $545.07. The portfolio still remains at 23 holdings. Performance-wise, we are all in the green, but not beating the market. In the 1 week, we are 2.19%, 1 month 3.40%, 3 months 5.78%, and year to date 6.72%. Looking at my 23 holdings, we have a combination of companies in different sectors with different purpose within the portfolio. Going clockwise, we have Apple, Colgate, Coca-Cola, Realty Income, Procter & Gamble, Waste Management, Clorox, Kroger, Kimberly-Clark, Starbucks, JP Morgan Chase, Home Depot, Johnson & Johnson, Nike, Digital Realty Trust, AbbVie, Texas Instrument, Hershey's, Pepsi, Visa, Automatic Data Processing, MasterCard, and Google. Hershey remains the largest holding year to date so far. The company bounces between 12 and 14% allocation. I'm not adding more Hershey's, but since it's a big holding, every time the stock goes up, it takes a lot of allocation. The second largest holding is MasterCard with 7%. MasterCard is an absolute compounder, a high quality business to own in your portfolio, so I have nothing bad to say other than that I want to continue increasing my allocation in this one. My third largest holding is JP Morgan Chase, and Visa is extremely close for the third spot. For Visa, I have the same viewpoints as MasterCard. For JP Morgan, investing in banking is difficult to do and understand. So if you invest in this sector, you must pick the best of the best. I don't see the largest bank of the US failing anytime soon, plus it's backed by the government. Overall, this is a well-diversified portfolio that brings a decent income with decent performance. Of course, there's a lot of room for improvements, like high-grading the portfolio, reducing the amount of holdings, and increasing the allocation in higher quality. But overall, I like where it stands and will move accordingly as time goes on. Now displaying the annual dividend per holding in a graph, we can see the most notable payers: Realty Income because I have a lot of shares, and Hershey's because it's my largest holding. Other notable payers in this dividend portfolio: Starbucks, JP Morgan, J&J, AbbVie, Digital Realty Trust, and Texas Instrument. The total dividend so far is $545.07 as mentioned in the portfolio value slide. Looking at the total return of my holdings, we can appreciate the winners and the losers. Most of my holdings are in the green. In other words, if I were to sell, I will be making money than my initial investment. Largest winner is Apple with almost 100% gains. Second spot we have JP Morgan Chase, and third spot Digital Realty Trust. The other winners in my portfolio might look small, but they are in the 30% gain, and some are close to 40%. Now for the losers, we got Realty Income, Clorox, Starbucks, J&J, Nike, Hershey's, and Pepsi. All of the losers are ranging between 2 to 8% except for Pepsi, which is less than 1%, and Nike that is losing around 12%. I don't see a massive concern with these as they are small holdings with the exception of Hershey's. Also, long term, I fully believe all of my losers will turn back into the green, so I am not concerned at all. Unfortunately, I am not contributing into the portfolio due to the lack of income, but I am reinvesting the dividends, therefore reducing the loss while doing dollar cost average. So that will be it for this portfolio update. If you made it to this part, thank you so much for supporting me and my dream. Don't forget to like and subscribe so I can reach more small investors. And again, thank you so much. I'll see you in the next video.